Hi, I'm Jessica,
And I'm Tracy.
and this is She's on Top, the place where we celebrate and elevate women.
And this is our third video in our series of Share Lawyers. And we're talking with Samantha Share. Hi, Sam.
Hey,
Hello.
Sam. Hi. And today we're talking to you about group disability. Last week we talked about individual. So, the first question we wanted to ask is, what qualifies you as a group? Like, how many employees should a company have before they sort of reach out and get group disability?
Well, it would really depend on the needs of yourself and your staff if you're an employer looking to purchase a group policy. But you could have as few as maybe 2 or 3 employees, and it would make sense to get a group. And that's a pricing concern that you'd have to discuss with a broker or an agent. But the benefit of a group policy, and we're going to talk more about group disability insurance, but typically a group policy would encompass a plan that covers for a number of different things. Most commonly, disability and life insurance are often sold together. And then another branch would be health and dental, which often includes medication, dental, massage, physio, all of those type of health services that many employers do want to provide those types of benefits to their employees. So that would make sense to consider a group policy. And if you're an employee of a company, you likely have group benefits, but you may not know exactly what you have, particularly on the disability end. You might know, oh, I have coverage for my medication or my dentist, but you may not realize that you have disability coverage. And most people often don't realize it until they need it.
So what is the difference then between an individual policy and a group? Are there major differences between the two policies?
When talking about disability insurance in general, the difference isn't, the product is quite similar. It typically would pay you a monthly income replacement or benefit when you cannot work due to reasons of a medical condition. The difference with a group policy is that you don't have control over what that policy is providing to you in terms of level of coverage. So typically most groups that we see is 60 to 70% of your pre-disability income. And some policies have a maximum. So let's say it's a maximum of $3,000 a month, and that's it, regardless of what your income is. So that's a concern. And there's different ways to look at that and to top up your coverage, or to consider, how much you're actually going to be getting, and is that enough? So we can talk more about that. But generally, that's individual and group disability on the face of it is not that different.
So yeah, that's actually what I was going to ask. So is it worth, if you're on a group policy at a company, to take a careful look at it, look at your disability, and then can you just say, you know what, I actually don't think this is enough, I'm not comfortable, and then how do you go about topping it up? Do you go to do you do it within the group policy, or did you go to another separate insurance company and get your own?
Well, it's all of those things, Jessica, depending on the situation. But I would say, if you're an employee, typically when you get hired, you get told by the HR department, these are the benefits that we're going to offer you. And typically there's a 3-month waiting period before you're eligible to be added to the benefit plan of most employers. But once that 3 months is up, then you join the group plan, and premiums are deducted from your pay for health benefits and LTD. You may not even realize that. But you should look at, when you get the benefit booklet from the HR, what is the benefit actually covering me, and how much would I be entitled to get if I had to go on disability? So if it's a 60 to 70% income, you might say, well, maybe that's not going to be enough. And then you could look to a private insurance individual policy, like we discussed last week, as a top up. Say, okay, I want to purchase an extra $1,000 per month policy just to, make it so I'm almost back to my full income. And you can do that. They don't cancel each other out. You could be claiming benefits from an individual and a group disability policy at the same time. So that's one way to top yourself up. The other thing to look at in a group policy, typically, let's say you get a raise. The next year, your employer should be offering you or letting you know that there's an opportunity to increase your benefit level that matches the raise that you got. Sometimes employers don't do that, and it becomes a problem later because they haven't paid the premiums on the higher level of income, and then you're not entitled to the higher benefit amount. So it's important that if you get a significant raise, that you're making sure that's being matched in the disability benefit as well. Okay, that's one part. And the other is what we call the non-evidence limit. Okay, so a lot of policies, particularly if you're a higher earner, most policies say, okay, the non-evidence limit is X. So the maximum you could get for benefits under this policy without submitting medical evidence is $3,000. So what the non-evidence limit means is you automatically get that coverage without having to submit any additional medical information at the time when you're joining the group benefits. Okay, but then if the policy has a non-evidence limit, and then you could submit medical information to increase your level of benefits, it would be worthwhile looking at that, particularly if your income is much higher than $3,000 per month, going back to that example. So myself, for example, I did that on my own group policy when I joined Share Lawyers because we had that type of a system. So I had to submit information about my own medical history to then qualify for a higher level of benefit. And it's worth it to do that, particularly at the time when you join the employer, because you're more likely to be healthy and, you know, more insurable when you're younger, or, you know, if you've been just started working for the company, and then you lock in that higher level of coverage for as long as you continue to be covered under that benefit plan. So that's another thing to certainly look at. And I've seen example, I had a client who didn't look at that, and her benefits at the time when she was claiming were significantly lower than they really should have been based on her level of income, because she never bothered to look into this non-evidence limit issue. So definitely.
That's actually really interesting. It was actually one of the questions I was going to ask you is, you know, and I know we discussed last week with individual disability, you give them all your medical records as much as you can so you won't be denied later. So obviously you're saying now with group, you kind of want to do the same thing, but what about, like, does your employer find out about your insurance? Like, what if you have mental health and you don't want your employer to know? Like, does the employer get to know this? I think that's important for people to know. Yeah,
absolutely. So no, the short answer is no, and that there's a reason why insurance companies and group policies exist, and it's to kind of provide that third party level of independence from your employer, because your employer really should not be privy to the details of your health or your medical conditions when you go off work or even before. So typically, you know, for long-term disability claims, it's typically hired by this third-party insurance company. Any medical information you submit would just go directly to the insurance company. But something that we often see is many employers, for short-term disability, so typically for the first 4 to 6 months that you're off of work, you might have access to a short-term disability plan. And a lot of larger employers, I'm thinking banks and some other large employers, what they do is they actually self-fund the short-term disability, meaning they are paying the employee, but they hire a third party to adjudicate or make the decision on the claim, because they still want to have that level of independence and not review their own employees' medical records. So it's not certainly something to be concerned about, but the system is set up in such a way that your employer should not be finding out about your medical
Good to know.
And we want to get into probably the most important part, which is why are claims denied. But I realized just quickly, you know, we talked about this in the second video, but what does disability cover? I think people always get it mixed up with critical illness or whatever. Can we just quickly again say, you know, what disability insurance is, like what it covers?
So disability insurance should cover you if you're unable to work for any reason that's due to a medical condition. So whether that's physical or psychological, and you have medical evidence, the support of your doctor to say that you cannot or should not be working. And then the disability benefits would pay you a benefit every month for as long as you are unable to work.
And then going back to group disability, you said that it included other things like dental and life, whereas individual doesn't, right? Is that correct?
No, so those benefits would be a group plan.
The group plan, okay.
So you would be covered for those things by virtue of your employment. And typically, even if you're on disability, if you're off work, you would be still covered for your health and dental for some period of time, as long as you and your employer continue to pay the premiums on the health and dental portion of the policy. But it is a separate thing from the disability part.
So probably now the most important question is, why are claims denied, and how do you protect yourself?
So, well, there's a huge list of reasons why claims get denied. I'm not going to go into all of them. I would say, on the outset, when you're joining the group, this non-evidence, making sure that you give them the medical information if it's requested is important. Perhaps less important on the group, because most of the time you're not asked those questions about your medical history at the time of getting coverage. I would say that the most common reasons we see for denial of group insurance is number one, pre-existing condition. Number two, not meeting the test of disability. So the insurance company accepts that you have a medical condition, but they don't believe that it's preventing you from working. So you could have a condition, you could have depression, but does it prevent you from working? And a lot of the time the insurer says, well, no, they're not denying that you have the condition. It's just a question of whether you're able to continue to work with that condition. And a third example that comes up often is what we call the change of definition. And that is a policy provision that's included in almost every group policy that we see. So what that means is, for the first 2 years that you're off of work, the test for disability under most of these policies is, are you disabled from doing your job? Okay, so the job that you were doing at the time that you went off work. And that is a somewhat easier test to meet than what they call the change of definition. So after the typically 2 years, the definition of disability changes to be that you have to be disabled from doing any job, not just your own job. Okay, and that is a harder test to meet. It's more relevant in the case where, let's say you were doing a very physical job and you had a physical disability. Let's say you have back pain, and they say, well, we know that you can't be a truck driver anymore, but we believe that you could do a sedentary or desk job after that 2-year period of time. There's always arguments that we make to the contrary. For example, if you have back pain, are you going to be able to sit at a desk for long periods of time doing a desk job? That would be one argument that we would make, along with other technicalities. But that is quite a common time. So we see a lot of people that get paid for, let's say, the 2 years, and then they get cut off. Other reasons that people might get cut off after being paid for some period of time includes things like surveillance or not getting appropriate treatment for your condition. So surveillance, meaning the insurance company hires a private investigator to follow you around.
Wow.
They are entitled to do that as soon as you make a claim. They can do that at any time. They don't tend to do it for that long, or for that many days, because it's obviously very expensive. But if they have some suspicion that you're not being truthful about your level of activity, your level of working, maybe they think you started some side business or you're doing something else, they might send out a PI, and they could cut you off on the basis of surveillance. I actually had an inquiry recently of somebody who was cut off for surveillance, and they said, "Oh, well, we saw you taking care of these kids outside, in front of your house, and we think you're running a daycare business, essentially." And she said, "Well, actually, I told you about this daycare business that I was running." But they said, "Well, we're still cutting you off because we also asked you to fill out this form about your activities on those particular days." And she filled it out, and she wasn't truthful about what she was doing on those days and what they saw her doing. So that's a bit of a credibility issue. So that's just an example, but all types of things come up, and you just have to be prepared that the insurance company is scrutinizing, and they have a right to do so, but they often can twist things around to their advantage. So you just have to be very careful.
So it sounds like you have to be like, so, I mean, obviously honest, but really specific when you're filling out your forms and applying to get the insurance. Actually, one last question I have is that you had mentioned that you still get your benefits as long as you or your employer are paying the premium. So what happens if, let's say after a year, now the employer says, "I don't want to pay your premiums anymore. You haven't worked for us for a year." What happens then?
Well, typically, the employer is supposed to hold your job for 2 years when you're off on disability. That doesn't mean they have to continue to pay the premiums for those 2 years. It does depend on what the employer's individual policy is. They may say to the person, "You can keep your benefits if you pay the premiums." And then the person would have to decide whether it's worthwhile to pay the premiums, depending on how much they're claiming their medication or other health coverage, versus how much the premiums cost. After that 2 years, the employer could terminate your employment at any time. And we don't have control over that. They do have a right to do so. And at that time, typically those other health benefits would end.
Wow, well, that's amazing, Sam. I think we've covered most of it. It's a lot to unpack. The big thing to take away for me, which I love, which I didn't know, is that I think people they have insurance for the company and they never look at it.
Yeah.
They're like, I just have. So basically one of the big takeaways I'm getting from this also is like, even if you're under a group policy, like look at what it covers and see if that covers you.
Yeah, read your benefit booklet for sure. And so these days, a lot of employers don't provide it on paper. They might give it to you electronically, but you should still be looking at it.
Well, thank you so much. It was so informative. And we look forward to our next video where we'll be covering, I believe, critical and life insurance. So we look forward to that. And thank you for all that amazing information. We'll see you next week.
Yeah, and if anybody, make sure to write in, because Sam is here to answer your questions. She checks our YouTube channel. We're answering them every week. So please write in with your questions, and we will get to them into the next video, or right under in our comment section. Thanks again, Sam.
Thank you.
Bye-bye.
Bye.
Bye.